Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hey everybody, welcome to Mortgage on My Mind. This is Natalie Salins, your host, and today our guest is Mike Belfor. He is a certified mortgage advisor and a branch manager and loan originator, of course, at American Pacific Mortgage. With nearly 2 decades of experience, he specializes in residential lending and creative financing strategies. Consistently recognized in the top 1% of mortgage originations nationwide by Scotsman Guide and Mortgage Executive Magazine. He helps clients build long-term wealth through real estate. Hello, Mike.
What's up, Natalie? We were chatting before we even started recording this. Oh, this is so fun. This is cool. Like someone that movement that knows a lot of people at our company. Now we're kind of shooting the breeze, having our time. This is cool. I'm glad to do this. So how are you today?
I know. I'm so excited to have you on. I'm good.
Good. Good.
I love having somebody on who does basically exactly what I do. So, and I was saying before, like, let's talk a little bit about what different types of banks there are. Like, what does that mean? You and I are at the same type of thing. We're at an IMB, it's an
Right.
individual mortgage bank,
Right.
and those have a ton of pros and cons. I
Yeah.
think more pros than cons, honestly.
100%. Agree. Where did you start at like a net branch or IMD? They don't come net branches anymore, but did you start in that sort of model at a broker? Where did you start?
I started at Countrywide.
No way.
Yeah, totally.
Yeah,
So
that's funny. I
go
worked
ahead.
at
Yeah.
Countrywide too.
Oh, you did? Did you start at Countrywide?
No, I did not. I started at Wells Fargo in San Diego.
Oh,
And
wow. Wells Fargo.
yeah, back in 2002. And yeah, I wanted to coach football and teach. I didn't want to do this. I don't think
Yeah,
anybody really wants to do this when you get started, but like, all right, well, you get to help people. And then you do fairly well and you do creative things. You're working for a bank countrywide. People don't realize this, if you do, but they were a depository. So they're federally chartered, right?
right.
Talk about banks. So you could go in there, open a savings account or things of that sort with a countrywide account. And of course, countrywide with their full spectrum lending, things shift a little bit to subprime lending. And, of course, now we have became net branch. Now we're set up at mortgage banks or mortgage banker, mortgage banking model like Movement or American Pacific Mortgage. It's interesting to
Exactly.
see the transition. But you're right. I
It is.
started at Wells Fargo. I worked at Countrywide, right? Like, and I worked at a couple of banks and I realized the banking atmosphere versus what we do. And I used to explain it like you could have vanilla, you could have Neapolitan, or you could have vanilla, you could have chocolate, or you could have strawberry. In our case, we get Neapolitan because we can't get
Exactly.
the banked models. We could broker a transaction. We have non-QM. We all really have it in-house, which I think helps us in this market, right?
100%. That's what's so amazing about being an actual mortgage bank, where that's
Yeah.
all we do. That's all we focus on. That's our priority. So we don't, so when Countrywide went down, I got shifted over to Bank of America, of course, because
Right.
that's who bought them.
Yes.
And being stuck, let's say, it's the best word I can
Yeah.
use to describe it, at a bank like that, where if you're talking about Neapolitan, you're only getting vanilla. Like there's not
100%.
even a hint of choco mixed in there at all. It is as vanilla as possible.
Yeah.
You are so limited. I felt like my hands were tied behind my back
Yeah.
every day, all day for 2 years. It was so limiting and frustrating. I
Mhm.
couldn't talk to any of my underwriters. FHAs took like 6 to 7 weeks to
Mhm.
close. Like it was just chaos. It was just a
Yeah.
mess. I'll never forget, the reason I left, I mean, there were a few reasons why I left, of course, but
Right.
two things happened in one week. One, a client of mine that I had funded 3 files for already was buying her fourth.
Okay.
And the listing agent wouldn't take my pre-approval because it was from B of A. And she came to me and she's like, Nat, I can't do this through you because you're with B of A. And I was like, I'm done. I'm done. I
Yeah.
knew I was done anyway.
Yeah. Yeah.
And then the very same week, I had a file denied, like sent to the fraud department, denied before anyone even talked to me about it
Oh,
because the transcripts were different than the tax returns I sent. So, just for all of you out there that don't really know what that means, at the time, there was a lot of fraud that went on, obviously. So, we got very strict in the mortgage business
1000%.
once the fallout happened, the
Right.
burn in 2008. And everything got more strict, and we started doing a little bit new things. So we would actually order transcripts from the IRS to confirm that the tax returns you gave us were the ones that you filed with the
Mm,
IRS. And we used to not do that. It was called a 4506 is what we need from you to verify your taxes.
Great.
And it was a new thing, basically, right? But sure enough, a borrower gave me his tax returns. We order a 4506. It comes back different. So it comes back
Mm,
that the income is different, that the IRS has something different. So, of course, B of A sends it straight to their fraud department, doesn't tell me about it, and just sends me a decline. This is a decline. It's with the fraud department. And I was
huh.
like, what?
No
Nobody,
way.
I like called my managers. I was like, how can you not call me? Like, it's a mistake. He sent us
Yeah.
the, like, literally, it was a dumb mistake. He amended his return. So it was just that there was
I
an,
was going
of
to say that. Yeah. I was going to ask, was
course.
a 1040. In case those listeners don't know, it's called a
Yes.
1040X, where you amend your tax returns for one reason or another. You may have missed a deduction or may, right?
You
So
got an
that's,
extra W-2. A lot of our
exactly
clients have multiple W-2s, multiple
correct.
1099. So like
Yeah.
another W-2 shows up late in at the end of February, you already filed.
Yeah.
You have to amend, right? Totally
Right.
normal, standard. We see it all the time now where a tax return comes in different, like all the time.
Yeah.
And they were like, well, we can't reverse it once it's been declined and gone to fraud.
I remember that.
And I had proof that it was just a simple mistake.
Yeah.
And they were like, sorry, nothing we can do. And I was like, I'm more sorry. Bye.
Yeah.
And like, that was it. That was my last, basically my last day. I gave my
Like,
resignation
peace.
the next morning. Yeah, I was like, that's it. And from then on, I've only been with individual mortgage banks. So from there, I went to Prospect Mortgage.
Yeah. I remember Prospect. Yeah. Yeah. Yeah.
Remember
Of
that
course.
it was Metro Cities, Prospect, and then it turned into, I think it's Homebridge now or
Yeah. I
something.
think it is too. Yeah. 100. Yeah. Yeah.
But they're just all individual mortgage banks. Why don't, so there's, for everybody listening, there's individual mortgage banks. There are depository banks, like Mike was saying, which is
Federally
where you can
chartered.
actually go into a branch, put your money
Mhm.
into it. And then what else?
Broker models, right? You can broker and just
Okay.
be a broker. So it's funny because I mean, in my industry time in 2010, I was approached by American Pacific Mortgage, but when I left, I actually was still in Hawaii at the time. I was working for Countrywide. I was at
Oh,
their
wow.
Honolulu branch. It was awesome. But I remember I
Oh,
got
cool.
recruited to work for a company called Cartwright Mortgage, which at that time was the largest mortgage broker in the nation. And it was because we could create down pipes. So I hired 70 people. I had 70 people working for me at that
Oh,
time.
my
The
goodness.
market crashed actually after I moved back to San Francisco, where I'm from. And so I moved back to the city. I was living in the city right by the ballpark. Things were going okay. And then the market crashed in brokers. And I remember we had docs and files. So if you're at a depository, you probably didn't have to deal with this, but you had docs and escrow ready to be signed. And then the lender went under that day. So they're not
Oh,
funding your loan.
God.
So we had that. I'm like, all right, we got to find something better. And then I started working commercial real estate a little bit. And then I kind of really took some time to think about, pray about. I'm like, do I really want to do this? And I got approached by a guy that was working for me actually on the commercial side of on real estate in San Francisco. And then he's like, hey, why don't you try this company Mortgage Now? And so here's the funny part, and this is where it kind of loops into what you're saying. So Mortgage Now, before Dodd-Frank, which is where things changed with qualified mortgages, we learned about that 2008, 2010, where now we have, this waiting period, which really came out with the Mortgage Disclosure Act, and it delays how
Okay.
long you could close. So we were getting files, and one of the first IMBs I started working for. It's called Mortgage Now out in New Jersey. The guy who owned it was on like the Real Housewives of like New Jersey as one of the husbands or something. My wife knows.
Uh-uh.
Yeah, I'm not going to say his name, but he was like the owner. He yelled
Judice?
at me.
You
Um,
worked under Judice?
so he yelled at me when I left the company, and so but yeah, so we zip realties around. They get all these online leads, houses in Petaluma that were going for 5 to 700K or 200,000. You could buy a house in Alamo Square, buy Alamo Square in San Francisco. It's where the paint ladies are, and full house, like beautiful, 600K
Yeah.
back then. And so these files were getting turned down by Bank of America or Chase for those reasons.
Yeah.
And then Mortgage Now was at the time the home of the 5-day closing. because we would underwrite it
No docs.
directly. No, just straight DU run LP. Our underwriters were tuned to that because most people other than in California were doing California did some crazy loans, to be honest, right? So
Yeah, I
like, but
know.
they were used to these underwriting guidelines. They're used to FHA. Most folks in California were not used to FHA. So we would knock out an FHA purchase in 5 days. And so that's how we grew. And then I was approached by Kurt Reisig, who owned American Pacific Mortgage 2010, opened their first retail branch for the company and in Nevada, Marin County. And here I am 16 years later. But it was very interesting to learn these things. And what I'm going to say to that point now to bring it full circle, now it's harder to get certain things done on conventional loan guidelines again, especially condos. TICs. We do a lot of TICs. So it's funny
You
now.
guys do?
Yeah, we do a
American
lot.
Pacific Mortgage?
Yeah,
Who
I do
who?
probably about 20 of them a year now. And, I've done presentations. I just presented the association on them actually in your neck of the woods last week, 2 weeks ago. But it's funny, we're doing these.
With the rental girls?
No, I know Britta though, and I love
Okay.
them. Yeah, she's
Me
great.
too. I
Her
work with
entire
them all the
team.
time, and
Yeah, she's
Christina.
amazing. Yeah,
She's
they're,
amazing. She's built
yeah,
such a business. Yeah.
seriously love her. But yeah, it's funny because I grew in this market where we would then have to broker transactions because now we have to broker again. But it's only because we didn't fit
Explain to
traditional
me.
guidelines.
So explain to our listeners what that means exactly. Like
So
it.
if you run into a transaction where there's a condo, we have something in California called SB 326. SB
Yeah.
326 changed the scope of condos, which in some markets has really hurt the condo market, where we're seeing some values even lost. It's because now they have to do these inspections. And if it doesn't clear their SB 326 inspection, then they do assessments. That assessment is like a bill. If you're a homeowner now, you have a bill to pay to clear your condo, and it goes into often litigation, which could delay that closing. So if you do a non-warrantable condo, you're kind of going above all that and you're finding the loophole to get the transaction closed, whereas other folks necessarily can't. Now, a lot of banks, especially the big banks like Chase, Wells, Bank of America, they don't want to touch them. They don't want to touch something
Yeah.
that Fannie Mae won't have or
Because
allow their
Fannie, so
guidelines.
it's the agencies won't finance on this
Correct.
quote risky condo, and then
Yes.
they call it unwarrantable. So
Correct.
in Fannie's website, it means it's unavailable. It means you can't get standard conventional financing on it. So what Mike is saying, you have to go outside of standard financing
Yeah.
and find what we call a non-QM, which is a different type of lender to do these mortgages.
Yeah. And they're still great. We still knock them out in 15 days, which people don't get. And
Yeah, we're
really fast.
delegated with
Yeah.
like 7 or 8 non-QMs, so we do
Right.
all of our non-warrantable in-house
Right.
and everything.
And it's funny, I'm sure you guys are seeing the same thing. The people that you were brokering to a couple years ago are now part of your secondary,
I'm not
right? Like,
brokering to anyone anymore because
that's
brokering
great.
is deadly to
Yeah.
me. I can't challenge the underwriters. I don't have control of my timelines. Like I
Yeah.
just can't
And if you
deal
don't have
with the lack
autonomy,
of
it's hard.
control.
Yes.
So
Yeah.
yeah, movement brought on and I'll have another podcast about non-QM so we can chat all about that. But
Yeah.
and whether you're delegated or not delegated, or whether
Yeah.
you have to broker out and what brokering out means with points and like, ugh, I hate brokering,
Yeah. And
but
it's ugly when you
it's
broker, you have to
ugly. So
charge
I
something. They
can't,
don't understand, like, why are you charging me? I'm like, well, there's only one way we could get paid. We're going to put this together. You're going to buy the house, but we're still going to
of
get paid.
course.
Right.
Yeah,
So yeah, it's
nobody's
all
working
linked.
for free. When you work for an individual mortgage bank, for our listeners,
Yeah.
the bank actually pays us.
Mhm.
So you as the buyers don't have to worry about our fee. We only get paid if and when we close. And when we close, the bank takes care of us. So you guys don't have to worry
Precisely.
about that.
Precisely.
And that's a really lovely thing too, because we get to wash our hands from that
Yeah.
with having to worry about what you're paying us and how you're paying it. All of that goes away. And it's not something you need to concern yourself with. And that's
Precisely.
amazing for me to not worry about that conversation.
That's the difference, as you asked, right? Like calling Natalie, calling myself, we have the ability to do this in-house, and it is more
Yeah,
of a Neapolitan feel where we'll find the financing and be able to execute it well. Because if you go to the big banks, you're not going to close quickly. You're not going to be as competitive. A lot of them won't do a full
right.
underwrite before making the offer, which does make a difference with, multiple offer situations. We're seeing a lot of that in San Francisco and Oakland right now, where there's 15 offers on a property. But if you're closing like Natalie or myself quickly and you're already underwritten, it takes the
Yeah,
guesswork out of it for the listing agent and makes his offer stronger. And that's why I think it helps, right? I won't go back to
100%.
big bank for that reason, for sure.
Never, no. And it's very, big banks and another financial institution out there that funds mortgages are credit unions.
Hmm.
Credit unions as well, they're so niche, like it's very limited. You
Correct.
have your guidelines that you have to go by. I once got a save deal from a credit union And they're allowed to do this because they make their own guidelines, right? So a credit union, for everyone out there, is a proprietary bank. It means
Yes.
that they fund and hold all their own loans. They get to make all their own guidelines. They make all their own decisions. They don't go off government regulation because it's basically a private lender. It's a proprietary bank, right? So I once got a save deal that the appraisal came in and the credit union just didn't like it. They were like, well, we kind of feel like we'll still do this, but we want you to bring in an extra 5% down. We want 25% down instead of 20.
Yeah.
And the buyers were
Yeah.
like, what? We don't
Yeah.
have an extra 5% down. We need to
Right.
renovate the property,
Yeah.
right? So
Yeah.
they came to me and we closed it really quickly with 20% down because, of course, we don't get to choose that guideline. We either accept the appraisal, which has like whatever, a credit risk score, but we accept the appraisal or we don't. And it goes by just the standard guidelines that we have to go off of regulation wise,
Yeah.
right? So that blew my mind a little where I was like, wow, they really just get to make up their own rules as they go along. And like,
It's crazy.
you
Yeah.
are
And they don't get it.
subject to that amusement park ride if you hop on it, like good luck.
I love that analogy. That's funny. That's good.
Uh,
No, but it's so true though. I mean, that's why going back to when you're at Bank of America, I mean, I would have, as you probably did once you kind of moved from Bank of America, right? You went on to Prospect, but you basically turn around and you have those referral partners now from the banks that, oh gosh, we're up against the wire. I can't close this, but you could call Natalie. Natalie will hook it up and she'll get it done. And same,
totally.
that's kind of what we did. We had, these bankers and, Chase, Wells, Bank of America, like, I can't do it, but call my buddy Mike, they'll knock it out. I'm working on a transaction right now where they sent it to a company that does no ratio owner occupied properties, right? So if
Okay.
your owner occupied is no ratio, it's giving you a reinvestment loan, but the rates are 8-9%. It's essentially hard money for a
Hard
client.
money.
Yeah.
Yeah.
And so a buddy of mine, I'm like, why'd they put you in this? Why don't they just do a bank statement loan? Because we could do those in-house as you can. It'd save a ton of money. And right now, what's
Totally.
interesting, I shared this on my own podcast today, but non-QM loans, because the agency loan level price adjustments, this is a trip. Bank statement loans, profit and loss loans are actually pricing better in some cases than a full documentation conventional loan. I'm
Oh, for
finding,
sure. I price out my non-QM along with all, even for a perfect file, full doc file, I'm
yeah,
pricing out my non-QMs because, like, I don't know if you've got like, we have different credit unions. We have Onslow
yeah,
Bay. We have like
right.
Westcom in New
Deep
Jersey
Haven,
and New
Accra,
York.
right? Like, yeah, SG Capital, correct. Yeah,
Well, the SG, those are all like standard, but we have like random credit unions on
yeah,
our list as well.
yeah,
Like
yeah,
I just funded something in upstate New York,
yeah.
and we have a credit union that we work with only in New York, and that rate was 6.1 on a second home. I don't know if anyone knows right now what a second home is with Fannie and Freddie.
Ooh, with those low level
Like
price adjustments for
it is like
2023, it's no bueno. Yeah, no.
low sevens, probably high sixes if you're lucky.
Easy
Yeah.
right now. Yeah.
I
And
was
so,
able to
yeah,
lock second home. There's no LLPAs on it. So second home 6.1 at the time. So we have these like weird things that we can do because we're an
yeah,
individual mortgage bank. We do
right.
everything. If it's out there, we do it. And normally we have options for it as well.
100%. And that's like, as you mentioned, we have credit unions back in Northern California that we work with on their secondary that don't do
Totally.
loans. So we do their loans, right? So we do the loan and then they service them. And so there is those occasions where they need to sign off on something for something crazy, not a 20 to 25% type mark as you had mentioned, right? Where it's like, oh, now you need another 5%, but they'll have to look at it to make sure they're cool with it. And so again, yes, we even have some, it's funny you mentioned that we do have credit unions back in like other states specific to that region.
Random.
Yeah. And it's like, I'll
Totally.
run pricing for a state that I'm licensed in, like, Texas. And I'm like, wait, who's that? That's
What?
the name of
And
the
they're
bank?
picky. They definitely
Yeah.
ask for some weird things where I was
Yeah.
like, wow, I definitely don't ever get asked for that, but
Yeah.
whatever. I
Yeah.
tell people all the time, you want a lower rate, you work a little harder for it because
Right.
money isn't free. You know,
100%.
money's not free.
100%.
So, like, you want a
100%.
lower rate, you're going to stand in line for it or you're going to work harder for it.
Yeah. I
Those
agree.
differences. You go to a big
Totally.
bank for a lower rate, stand in line. Everyone's in that line. You know what I mean?
Exactly. Exactly. You hear the thing 4.75 on the radio. Yeah, but they recorded that in February, right? And now they're posting it today, right? Like,
Totally. I,
yeah,
I have
it's crazy.
I have like clients that are like, my friend just closed, and you're like, when did they close? Oh,
2020.
before the war? Oh,
Yeah.
before the oil? What? Oh, real? Okay. That's
I
great
was
because we're
talking to
like
somebody about,
1% higher now.
I love this conversation. Love hanging out with you. So I'm going to ask you a question. Like, do you think that if Iran ends the war, we're going to get off topic from what we're talking about.
Oh
It's like
boy.
bank setup.
Okay.
But when Iran ends, rates are going to drop, right? I mean, because of inflation. Are you on the same thought? I was discussing it because we're looking at GDP that came out today.
I
We
mean, I
saw
think
some
that's the
other indicators.
obvious.
Right,
Yeah, I think that's the obvious assumption.
right,
I think it will, like Iran war stops, oil goes down, maybe. We still have to wait. There will
right. Because
still
it's a
be
cause and effect.
a
Exactly. Yes.
lag time of like, is inflation, we will have to wait till the next inflation numbers come out. We have to wait to see actually how consumer product changes. Like all of
Yep.
that will still take a couple months to shift. So it's not going to be like a that.
It's not like a, yeah, like a light switch.
I
No.
don't, yeah, there might be like a knee-jerk reaction for like a week or something, but
Right. When
then
they said they're going to buy mortgage-backed securities, remember that last fall? And then like literally for
but
like 2
one,
days, like, and then, yeah.
and then none. There's always this like strange knee-jerk reaction when there's news with the Fed,
And
and then
it was like on a Friday. So then you go into a weekend, you come back Monday, and everything's completely the
it
opposite,
was the
right?
worst. I had like 17, not obviously I know the number because that's exactly what I worked on all weekend. So I had 17 refis to lock Monday morning. 17, because I had done like a big
Campaign.
campaign.
Yeah.
And I talked to like 40 people called after the campaign. I set up on Thursday and Friday, I set up 17 different refis. Those are the
Yeah.
people that I could like talk to in time.
Yeah.
And then Monday happened. I mean, Saturday happened. Monday came and I was like, hey guys, I don't have that rate anymore. And it's not like it shifted terribly, but like I listen to Barry Habib every
Right.
day.
I love Barry. He's
I
great.
love him.
100%. Yeah.
And he basically was like, hang tight. It's a knee-jerk reaction. Don't do anything yet. And I listened to him and it did just get worse and worse and worse. And so
I remember it. Yes.
I've got a lot of stuff just sitting.
But here's the fun thing, though, and I'll share this with you, to all the clients listening as well. Talk to your loan officer, stay in touch with your loan officer. If you have a solid loan officer like Natalie or myself, call one of us. I don't care which one. We're both pretty cool. I want to hang out with Natalie later. She's rad. But I'll be honest, like, because I have 200 clients that we have ready to go. And we did, gosh, 49 refinances in the last 12 months because it is those dips. Just be ready. And so talk to your loan officer. And again, if your loan officer isn't following up and you're listening to this and you're waiting for rates to drop, talk to someone who could talk about what we call strike rate. And Barry talks about this a lot. We talk about with Loan Atlas. I'm faculty at
Totally.
Loan Atlas with Tim Brahim and Josh. And we talk about this often. We talk about making sure you figure out where irrefutably it would make sense to refinance and is going to benefit you. Once you have that strike rate, you're in a system like Natalie. I know she has it for a fact. I do. And we let our clients know. And then I send an email weekly. This is what's going on with rates. We're far off. But when we get closer, I'm blowing
Yeah.
you up and we're going to lock you in. But make sure you're on board. It does happen literally like that, like a thief in the night. It'll be there and it's gone the next day. And we had them ready. That's why we did 17 at one point. Then we did another 33 last year. And then we
Mhm.
did 16 this year back in
I
January,
funded,
February.
yeah, I funded a
Yeah.
lot in January and February.
Yeah. It was huge. And it was because, yeah.
Those were big months for me.
Yeah, and it was just like taking care of your clients. You got to talk. And if you
Yeah,
have a loan
of
officer that
course.
doesn't let you know what's going on, call her, call me, please. And we want to help. And we will call you and check in with you because we just like people. This is why we do this for, going back to Countrywide years, right? And so it's
Right.
just an opportunity for anybody because I do think that's huge. And that should be said, I think, all the time, and you're still calling your clients, but we're not there yet. We got a ways to go, right? It's
Oh,
just
like once a month. I mean, honestly, I've reached out like 2 or 3 times since, just like, hey, still hanging tight. Like,
yeah,
of
yeah,
course, in April, I was like, it got worse.
yeah. Just send the gif of the cat falling off
It
the
just
tree,
it
the old
keeps
poster
getting
from the
worse,
90s.
but
Yeah,
the
yeah, yeah,
file is set up and ready to go. I mean, I have clients that like ordered the appraisal.
yeah.
And now we're sitting on an appraisal that I'm like waiting that I'll just pay for a recert of value when we get to it, but like
Yeah.
that was a tough couple weeks where you're like, what happened? And again, such volatility, such an impossible place to even slightly recommend or understand what's about to happen in the market. There is
1000%.
just no way to advise anyone on what's about to happen in this market.
Agree.
Just
Agree.
so
And
hard.
that's why it's so important to call your clients. I call
Yeah,
clients who are actively looking, we try checking weekly. Hey, this is what's going on
totally.
right now. If you see something over the weekend you want to work up, let me know. We'll update. I use Mortgage Coach. I don't know if you use that system, but like,
It's amazing. The
yeah,
best refi system of all time.
100%. And just a full presentation and those sorts of tools. And this is going to bring it back full circle, I think. I figured it out. I figured out the bunny trail. Here we go.
Okay.
Going back to like, if we worked at a big bank, we're at a call center, we're working at a desk inside a depository bank. Chances are we're not following up with our past clients. We're letting the system and the bank tellers, the personal bankers in that particular branch refer us, which is fine. And that's the model
Totally.
that they have. But again, that's why it helps to talk to somebody that works for IMD, like, one of us, where we can continue to guide, continue to nurture, and continue to treat it like a true relationship. Because if our
100%.
clients don't bear fruit, then ultimately we're doing them a disservice. We're here to help them manage their portfolio. So, I say this often. I know people like the mortgage interest rate deduction. I'm like, what can we do to help accelerate and pay off your house? I'm a
Yeah.
mortgage guy who hates mortgages. So let's find a way that we can help you manage that debt.
Some mortgages, yeah.
You know what I mean? Yeah.
Not the 2.6 mortgage.
No, I
The
mean, if
free
it's at that
mortgage.
point, right,
Nope.
that's a free mortgage. You can
That's
hang
free
on that for a
money.
bit. Yeah,
Don't ever pay
exactly.
that off.
Just hang on to it. Exactly.
Yeah. All right. Well, this was amazing. I'm going to wrap it as well.
Yeah.
Everybody, thank you for being on. Mike, such a good conversation. I think we could extend this like another couple hours probably.
For sure. We'll have to get
but everybody-
tacos or grab a coffee or something at some point. 100%.
100%. Everybody, please look, at the bottom with all of Mike's information. If you need anything, especially on TICs, that is a super niche in the market. Not many people do that at all. And thank you so much for being on. This was a total pleasure.
Absolutely. Thank you so much for having me. Have a great day, my friend.
You too.
Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.